Hey, Ashley, how are you doing today?
Hey, good. How are you?
I am doing fabulous. So what is your plan for this weekend?
Oh, what am I gonna do? Probably work in the yard a little bit, do a little
Yeah,
pruning. Birkin and I will probably find some mischief to get into.
yeah,
You never know with us.
yeah. Very cool. Very cool. Well, I am doing the Moonlight Madness run. It is tonight. So that'll be fun. It is something that we all do yearly. So it's an evening run downtown. So that'll be really fun. What other plans do you have, or what exciting things have you been eating lately or trying?
Eating cookies, definitely
Cookies.
cookies and jelly beans.
Yeah. What is your
Um,
favorite type of cookie?
I mean, I love a good, like one of those white cookies with the pink icing all over them.
Oh, yeah, they're really good.
Those, I mean, I can get behind those.
Oh, like I think they're loft. Are they loft house? Is that what they're called? I think
They
they.
might be.
I think they
I
are.
mean, you
Yeah.
could get them at like the teeter, but
Yeah. Yeah. I think they're out of Utah. So I think that's what they're. I like those. I actually like those. So I'm not a huge cookie fan, but I like those. So that is very fun. Yeah, I am gonna be talking to a guy that does make cookies, and he started his own baking business. So you'll have to listen to that one if you're a
oh
cookie
yes.
fan. Yeah, it's pretty cool. But today we were talking all about refinancing and all the refinancing things. So I am so excited that you're here. Again, I'm here with Ashley McKenzie Sharp with Highlands. And we are going to talk all about refinancing. So I guess we should probably get down to business and stop talking about cookies,
Let's
but
go.
cookies are good too. And
I
anything
love a
else
cookie.
fun in the world is great. And so, first of all, what to somebody that's like a first time home buyer that does not have a clue what refinancing is, what is it?
So refinancing is taking your current mortgage that you have in place
Mhm.
and replacing it essentially with a new mortgage, a new rate, a new term, and a new payment. So it can ideally it would either lower the term of your mortgage, so the years that you're paying on your mortgage, so
Mhm.
30 years to 15 years, something of that nature, or lower your rate and lower your payment, which is what most people are interested in right now.
Oh, okay. So, what is the current like rates look like compared to what homeowners' existing rates are? So, what are you seeing?
Over the last 24 months, most people have probably secured a rate in the sevens, maybe sixes, somewhere in there.
Uh-huh.
And there's a few eights and nines out there.
Yeah,
And so they're starting to come down now where they're in the low sixes and fives.
yeah,
So it's definitely getting hot. It's a great time to go on and at least get your application in so that you're in line and you can get locked in as soon as the rates kind of hit that bottom.
yeah. And those lower rates, like that like that in that five like percent, that gives you so much more buying power.
It
So I can
does.
see how like it's it's kind of picking up. Like I know when I've had a couple open houses, I was surprised at the last one. They were like had a couple of people that were like, "Oh, I popped back in the market," and I'm like, "Oh, okay, this is good. We need this." So
I
I
mean,
can see
it's
that.
saving people probably on average a couple $100 a month,
Yeah,
right? I mean, that's big,
it's
that's
huge.
a lot of money.
Yeah, yeah.
Real money.
I think the last 5 kind of percent, I got a buyer just recently. I think it saved him like 3 to 500 a month, and or something. It was something crazy like that. I can't remember exactly, but I was like, "Oh, that's a lot. That's a
Yeah,
lot."
that's real money. That's
Yeah,
something you can do
yeah,
something with.
yeah, for sure. So on a refinance, what are the costs associated with are do closing costs, are those included, or how does that all work? Just for people out there that maybe again have like this would be their first time.
So with refinancing, you do have closing costs. And I know a lot of people are out there saying there's no closing costs. Well, there still are, right? I
Yeah.
mean, most of the closing costs we try to just finance back into the loan. So use a little portion of your equity so that you finance it back into your loan at that lower interest
Yeah.
rate. And that way you don't have to come out of pocket with cash. Also, when you close on a mortgage, you skip a mortgage payment, which
Oh
is
yeah.
nice.
Oh,
That's
that's
nice.
great. That's even
Yeah.
better. Yeah,
I
that's
mean, the
really
holidays are coming up, so
yeah,
it's definitely going to help.
yeah.
But I mean, on average, I would say closing cost if you need an appraisal, you will have the cost of your appraisal. You may
Mm-hmm.
have to reset your escrow account, so your taxes, your homeowner's insurance. But remember, if you have an escrow account with your existing loan, those funds will come back to you after
Oh.
we pay them off. So it's kind of a wash, but it is something that you have to kind of account for when you're thinking about closing. And then the other expense is going to be your attorney fees. So you do have to go back to an attorney and they will close your loan, and there's title insurance and recording fees that you have to account for. But
Yeah.
overall, just closing cost expenses minus escrow, I would say 2,500 to 3,000, somewhere in that range. It's not that bad.
Okay. How long does it typically take to do a whole refi?
So there are a lot of properties out there with a lot of equity. So when we're running these through, we can get an automated waiver of an appraisal. And if you don't have to get an appraisal, we could get you closed in 2 weeks. But I would say on average, it's similar to a purchase. So I would say, 3 to 4 weeks, maybe 30 days, standard process. But definitely, if you're on the ball and you can get us your documents and we don't need an appraisal, 2 weeks and you're done. So hopefully pain-free.
Oh, well, that's awesome. And that is, and I know that with refinancing, I mean, I know the closing is a little easier sometimes, like the whole process.
It is. I mean, you already own the home.
Yeah.
So the stress that's there when you're purchasing a home is, I mean, it's just not there. You already have a loan in place. You already are moved into the house. So you're in a much more relaxed state, and you're just going in, redoing your mortgage. You're going to save money. So it's just a win-win.
Yeah, it sounds like it. So how long does it typically take you to recoup the financing cost and through the monthly savings when
It really depends. I mean, if you're really lowering that rate by 1 to 2%, and depending on how much you owe, if you're going to save $200 to $300 a month, I mean, if you're saying closing costs are 25 to 3,000, I mean, you're going to recapture that cost in under a year.
Oh,
and I would say probably on average, it's going to be 12, maybe 24 months, just depending on, some different factors, but it's fast. It's a fast recapture. And from years past where rates were really dropping year after year after year, we had people who refinanced multiple times. So this isn't a one and done type of thing. I mean, if the rates go down to the 5s, you refinance. If they drop into the 4s or the 3s, and it's going to save you another couple $100 a month, you refinance again. I mean, if it makes sense and you're going to recapture that cost, you do it.
So what's the rules? Like, how long do they have to wait to refinance?
So typically you want to have a loan for 6 months. So after 6 months, then you can refinance. If you want to get cash out of your home, right? So cash out would be taking advantage of some of the equity. Maybe you want to do renovations, things like that. Then you need to have been in your home for 12 months so that we can use the appraised value. So we will get a new appraisal. We'll use that assessed value in order to pay off your existing loan, and then give you X amount of cash back.
Oh, very nice. Okay. I always tell everyone like a year, so that's why I figured I'd ask. Because I was making sure I was like telling everybody the right thing. And I did have another question. Are there any prepayment penalties on the existing mortgages? And beyond that, there are so many first-time home buyers, especially where we're at in North Carolina, that have used down payment assistance. How does that work if you refinance? Because I know you typically have to pay all that back. Can they refinance, and how does that work?
That's a tough one. So on just a standard average loan, there are no prepayment penalties, right? And you're not going to be penalized for prepaying a loan where you had down payment assistance. But every program is going to be different. Probably the most popular program here in our state is North Carolina Housing. And with North Carolina Housing, they will not subordinate, which means they will not take second lien position behind a new first mortgage, which is what we will be doing with a refinance. So in order to refinance, you need to be prepared to pay that $15,000 or whatever amount you borrowed back. Remember, you borrowed that lump sum at a 0% interest. There's no interest. There's no prepayment penalty for paying that amount off. So if you're going to save a couple $100 a month and you have the money, I think it's worth it. Go on, pay those funds back. let someone else use those funds to buy their first home. Overall, it's been a win for you. But yeah, that's going to be the one thing everybody has to keep in mind. They will have to pay that back.
Yeah, yeah, and I mean, I look at a lot of the homes that I've sold over the past couple of years that have used down payment assistance, and I'm like, if you got the equity, you might as well just be done with it.
You
So
paid
that's
it.
right. Yeah,
Yeah, if you have the equity built up in your house, then you can
Yeah.
actually finance that 15,000 DAP or whatever it is that you took out back into your loan and just take
Yeah.
out one loan. So you don't necessarily have to pay it out in cash.
Oh, okay. Okay,
Yeah.
very nice. And what are the current like available products out there, or would you recommend for refinancing? What loan products?
So anyone who is a veteran who has a VA loan, it is so easy. They do an interest rate reduction loan. We literally go in, don't have to get an appraisal.
Mhm.
We pull credit, we do a little application, and
Mhm.
bam, they're done. So I mean, we lower their rate, lower their payment, they close. They're good.
Yeah.
So VA, absolutely take advantage of it. FHA has a streamlined process too, where we don't need to get an appraisal. So if you have an
Mhm.
existing FHA loan, we can refinance you. We do a quick credit app, and we don't have to get an appraisal. We just finance the closing costs into the loan and drop your rate payment and you close.
Oh, that's awesome.
USDA has a similar process.
Yeah.
Conventional does not have a streamlined process. But with conventional, the goal there is typically to get rid of the private mortgage insurance. So it's
Yeah.
also a really good option. And sometimes we'll have slightly lower rates. So
Oh, okay.
lots of good stuff.
Yeah, it sounds like it. I mean, it sounds like this is definitely like something to think about right now, as we know that rates are going to drop a little bit. And then as they continue to drop, I mean, it's definitely something, a great idea for a lot of folks. But one question about that is, because you're doing a credit report, how is your credit, how is it affected on, when you're refining? Like, because I know that might stop a lot of folks.
It does. I mean, so if you have purchased a home and then just gone into major debt and haven't been making your payments timely,
Mhm.
it could hinder you a little bit. But
Mhm.
I will say this, we know that credit debt is at its all-time high.
Yeah.
If you have a house, if you own a home and you have equity in your home, there is no better time than to refinance. Even if your credit's a little bit lower, FHA is very forgiving, VA is very forgiving,
Yeah.
with credit scores. So we can finance all that debt into one fixed payment and free yourself. So I mean, I think that could definitely be something that resonates with a lot of people.
Yeah.
Credit scores on average, I would say we would love for them to be around 620, 640.
Mhm.
On the low end, you can go lower. You could go
Mhm.
down to 580.
Mhm.
But then for conventional loans, I would say 680 to 700 would be kind of the lower end for
Yeah.
conventional. And then of course, if you're in the 700s, then you're going to take advantage of the lowest interest rates available.
Oh, wow. Yeah, yeah, for sure. And are there any special like programs or incentives for refinancing or anything available?
Yeah, I mean, for my prior clients, we're definitely trying to eliminate closing cost expenses. So lender fees gone. We're definitely doing that. And we're trying to do that for all clients. I mean,
Yeah.
again, most clients we're not having to get appraisals for. They do have to pay their, attorney fees. And
Mhm.
we've even worked out some good deals with some of the local attorneys. So
Oh, nice.
hopefully we'll minimize that expense and really increase your savings.
Yeah, yeah, it sounds like it. So another quick question. I just was curious if you could explain the difference between a rate and a term refinance. What are these and what is the difference between them?
So rate and term refinances are where you just refinance the amount that you owe on your current mortgage and maybe the closing cost back into the loan, and you lower your either the term of your loan, which means is it a 30-year, a 20-year, 15-year,
Mhm.
so you pay it off faster,
Uh-huh.
or you'll lower that interest rate and lower your monthly payment. The
Okay.
other option would be the streamlined option is kind of like a rate and term or cash out refinance, which is what we were talking about, where you can actually use the equity in your home, cash out, you get a check at closing instead of paying anything. So you get a check for 20 or 30 grand and you can go use that to pay off your car, pay off your credit card debt, whatever that looks like, or renovate your kitchen, renovate your bathroom. So it can really be a great reinvestment into your home.
Yeah, that's amazing. That's awesome. I mean, I was just thinking about all these people out there that have so much equity.
I
It just
know.
would be amazing. Like they could pay off so much debt.
I know.
That's just would be amazing. I mean, maybe they could move or sell for a couple of years, but I mean, you never know. We don't have a crystal ball. We don't know what's happening. For sure. So, is there any downside to refinancing, especially in this current market?
I think the one thing to keep in mind is what we were just talking about is recapture, right? You don't want to pay so much in closing cost expenses into a loan where it's going to take you years to recoup that expense.
Mhm.
And there's just be careful, check around with your lenders, ask for a second opinion. I think that's really vital. And you definitely want to have other people take a look at your quotes and make sure that you're not overpaying for the loan and not
Yeah.
saving enough monthly.
Mhm.
I think that's probably the one thing to watch out for. And I mean, if you really think you're going to be selling in the next 6 to 12 months, there probably isn't a good reason to really refinance. You should
Yeah.
probably hold on to your funds and ride the season out and then list your home.
Yeah.
Just keep in mind of things that are going to happen to you within your own life. You definitely want to be cognizant of that recouping of the closing cost expense.
Yeah. And that was actually one of my questions. Like, it was that, like, does it make sense for everyone to do it? But it sounds like it doesn't. Like, it just depends on your situation and what works best for you. But generally, when you do refinance, what happens to your monthly payment and overall loan term? Can you explain that? Because I think people understand it, but then I think some people they're like, Wait a minute, explain all this."
So, I mean, I would say the average, United States citizen has
Yeah.
a 30-year term mortgage, right? So, if you take your mortgage and you refinance into another 30-year fixed mortgage, and let's say you owe 25 years on your mortgage right now, you've had it for 5 years, you paid it down, we
Yeah.
can go back to a 30-year fixed mortgage.
Okay.
You could potentially take a lower interest rate and go to a 20-year fixed mortgage.
Okay.
There's different interest rate terms where you could go to
Yeah.
a 15-year or a 10-year.
Yeah.
So it kind of depends on how quickly you want to pay that mortgage off
Yeah.
and the monthly payment that you're comfortable with.
Okay.
So that's probably the biggest question is what is my mortgage going to go back to? Is it going to go back to a 30? Well, it can if you want it to.
Yeah.
What's more important to you, paying it off quick or having that lower monthly payment?
Yeah, yeah, I can definitely see that. And I can see where it would help so many folks. Like if they could, if like, go back to 30, I mean, it just might. You just never know. Everyone's got a different situation. So I love that so much. Well, Ashley, that is my last question. All things refinancing. I appreciate you so much again for coming on and talking all about refinancing. Ashley's information will be below as I can't talk right now. It'll be below in the comments. So if you have any other questions about refinancing or anything lender related, definitely reach out to her. She is easy to get a hold of, and she's so brilliant. She'll be able to answer all your questions. And I appreciate so much again that you came on and talked to us today.
Thank you, Carrie, for having me.
Well, enjoy those cookies too, and
Yeah,
also the yard work. It sounds like a fun time. So I would enjoy that. Be a good time. And I hope you have a fabulous weekend.
Thanks, girl. You too.
Thank you. I'll talk to you again soon.
Yes.